pros are just amateurs who know how to gracefully recover from their mistakes. My friends, make mistakes. It's okay. That's what learning by doing is all about. If you're not making mistakes, you're not learning. I tell my kids all the time when I'm taking them out skiing and they are in that learning process, don't count the times you fall. In fact, if you're not falling, you're not trying hard enough. So every day, 10 to 15 minutes, make all the practice trades you see. When you're ready to make the next step, become a Patreon supporter, get those 10 weekly vertical crossovers going up and 10 going down on the S&P 500. We find those for you every week. So far, we've been able to find 10 a week. And of course, I updated you on the spectacular results that we had on those weekly vertical crossovers from that first week that we started releasing them. Just amazing numbers. Microsoft up 5.1. This was last Thursday when I ran these numbers. Yum Brands 8.8. Domino's Pizza 14.8. Google 10.47. And again, I'm just going through the whole list. Everything was up. Two of those trades I didn't think would have been worth it. One of them was 6.1%. But again, a little sketchy. The same with WAT. That was, let's see, the 6.1 was Norwegian Cruise Lines, and the 4.9 was WAT. I didn't like that one so much, and the one I liked the least was EIX. That was 3.8. So again, I just want you to get those, want you to practice trade those, want you to be able to see how what we do here works. And it's so important to see it working, to fill out your trade worksheet, your daily market worksheet, your weekly market worksheet at the end of the week. I can't emphasize how important that is, but most people don't listen. They don't listen. They listen to my voice a little bit. They don't go through the whole training. And again, that's why most people aren't going to make it. They don't have the staying power. But for those of you who are strong enough to do it every day, 10 to 15 minutes, think about that. That's all it is. Let's get to it. What do we see going on? The S&P down a little bit for the day, 0.97. The Q's way down, 2.52. Now, of course, we had a weekly vertical crossover going down at the end of the week. Bonds down over 1%. Gold up 0.32%. Bitcoin up a little bit, 0.39. Now let's jump first into the S&P 500. We see things starting off. Are we reaching a higher high than the prior? The high, 422.74. Let's look at the prior week, 422.82. So again, 8 cents higher last week. We have a green up candle, not a big up candle yet, nothing like that up candle back on the week ending the 16th of April. The derivative oscillators lost some energy. Price percent oscillator heading down. Remember, these are Heiken Ashi candlesticks we're looking at. Today, of course, ended up crossing over, going down. We finished drawing this latest 2-day candle. Even though it's a green up candle, we're paying close attention to the price percent oscillator. Derivative oscillator switched at the same time. Of course, if you've been riding the S&P up from the jumping up point, the jumping in point, let's see where that was. We jumped in somewhere around the 407.51 mark, and the high, like we said last week, 422.82. If you jumped out at the close today at 420, having jumped in at 407.50, I guess you would have done okay over the last 4 weeks, don't you? Now, again, we know we get out when that 2-day crosses over in the opposite direction. You don't have to wait that long. In fact, we don't typically recommend you wait that long. You draw your trend lines, you set your profit and loss bands, you figure out what kind of profit you should realistically make based upon your prior practicing and your backtracking. You put in your loss bands, and when you start hitting those profit bands, whether you have 1, 2, or 3, that's whether you bifurcate or trifurcate or you just single up and out, whatever it is you do, Again, you follow those rules. You can modify them as you go along. But whenever you increase your loss parameters, you've got to have a darn good reason. So we see the 2-day has taken us out. What about the half day? Not crossed over yet. We can see things up in the morning and then dropping in the afternoon, piercing that 2-day trend line on the half-day chart. That's where we are on the S&P. Let's go to the Qs. That's the Big Debbie Downer for the day. Of course, we had a weekly vertical crossover at the end of the week. How many of you jumped in at 334.87? And of course, a low today of 325.55. That's over $20. Is it not? 334.87 to 3. No, it's not. It's not over $20. 334. It's $9. Okay, so around $9. That was the low. Don't expect you to just gobble that up that first day. You may have gone ahead and, of course, the minute you buy anything, whether you're buying, and again, these are practice trades, not a stock calling service, but remember, the rule is whenever you enter a trade, whether it's the inverse fund for QQQ, what is that? Well, of course, that is PSQ. I hope if you're interested in making money when the market goes down, you are practice trading the inverse funds. In fact, I'm going to put that inverse fund training at the end of today's video. I'm making a note of that right now on my note sheet. Inverse. Okay, I'm going to have that for you at the end of today's video. We do have a special training for you guys, by the way. The training today is how to master the charts. You'll like that. I talk about sell in May and go away, live to trade another day, what the summertime trading zone's typically about. Wasn't that way last year because of COVID and who knows what, but it may be that again. So I encourage you to listen to that training. If you're not getting that training, you're not a subscriber, you go to chartingwealth.com, sign up for free. So PSQ, of course, goes in the opposite direction. You see that the price is different than the price for the Qs. In fact, it's a lot different. It's about $13 compared with 300 and something, but it moves at the same percentage. So if you're practice trading $100,000 worth of the Qs, then of course, if you practice trade the same amount of PSQ, then what happens? Well, it's supposed to move up about the same percentage, but you got to practice this because it is different. The fees are more, it resets every day, it is different. It doesn't work exactly the same. That's why you have to practice it. Of course, and what do? You use the profit and loss bands. Now, I always stay with one chart. I stay with the Qs. I stay with the underlying chart to track where it is I would get out, where it is I would stay in. So you go ahead and you set your profit and loss bands. You set your good till canceled sell order the minute that you are entered into the trade. Same with puts. If you were putting down on the Qs, then of course, the minute you entered the trade, you would go ahead and 20% up and out, whatever it is. And of course, when you're doing practice trading for the first few times or even longer than that on options, we always urge you to do both in the money and out of the money trades so you can watch and understand the difference between intrinsic and extrinsic value, time value, typically several months out in time, so that you're not stuck if things immediately go against you and you just get hammered down because you're fighting time at the same time if you buy an option that is expiring very soon. So those rules are all laid out for you as a Patreon member in your free Options Made Simple the Charting Wealth Way. So we see, and that comes with, that 3-part training comes with every membership in the 3 levels. So what do we see going on? We see, of course, the Qs peeling away, heading down to over 2.5%. Price percent oscillator had already crossed over, going down, separating from the signal line. But look at that. The derivative oscillator still isn't negative. Isn't that interesting? What do we see on the 2-day? Of course, diving down the price percent oscillator and the derivative oscillator, we can see a smaller candle that is forming, but it is heading down 3 in a row. What about the half day? We can see where things had bounced up on Friday and then rolled on over, heading down on Monday. Again, the magic of the weekly vertical crossover. It's hard sometimes to understand it. You say there's just no way. And then it surprises you because it goes that way. What do we see on 20-year bonds? Leaving stocks, bonds down for the day, 1.01%. Red down candle forming, dropping through the weekly trend line. Price percent oscillator still heading up. Derivative oscillator, it looks like it's up just a little bit. 2-day chart, we can see a red spinning top with a long wick on the top, a long wick on the bottom, and it's right just below the 2-day trend line, just above the weekly. Price percent oscillator heading down, derivative oscillator positive, losing momentum. And we can see 3 strong down candles representing a day and a half, a hammering down and just accelerating as those candles get bigger. Price percent oscillator spiking down, derivative oscillator heading down. So we'll keep an eye on bonds, showing some weakness there on both the weekly and the 2-day. So we'll watch. And again, that weakness is in the Heikin-Ashi candlesticks, not necessarily much on the price percent oscillator, at least on that weekly chart. And both of them still positive. So we leave bonds, go to gold. Gold up for the day, 0.32%. That weekly vertical crossover in gold, somewhere around the 166.50 mark to a high of 172.84. It's pretty beautiful. And of course, starting the week off up, well, I mean, it looks like it's a booming, but it's 0.32% for the day. But that is a big old candle starting off. And remember, Heikin-Ashi candlesticks are showing us average pace. They're calculated differently, but that's looking pretty good. And we leave the weekly, go to the 2-day. It's looking nice also. Nice big green up candle, pushing through the Bollinger Bands as they widen out, showing us increased volatility. Price above the 2-day and the weekly. And on the half-day, up in the morning, bit of a retraction in the afternoon. Still up for the day, about 1/3%. Now we're going to leave our big four. Take a look at Bitcoin, up 0.39%. Again, starting the week off with a green up candle forming, but that price percent oscillator still heading down. Derivative oscillator gaining a little bit of downward momentum too. 2-day, about flat. Derivative oscillator losing momentum. Green candle forming. Formed. That ended, and we can see it about where things topped off that prior 2-day candle. So again, both the weekly and the 2-day negative. Half-day has been positive since all the way back on the 28th. That was Wednesday the 28th. And of course, again, sideways sliding. We are seeing that. We've not hit the high that we hit back on Monday the 3rd of May. So we'll continue to watch, see what Bitcoin's going to do. Just remember, you got the weight of the weekly heading down and the 2-day. What'll happen when Bitcoin starts to boom again? Of course, we'll see that 2-day precede the weekly, and then we have that weekly vertical crossover, hopefully not too far in the future, and we can see Bitcoin a-booming. We'll wait, but right now all that pressure is down. That's where we are, folks, as we end the day. If you want our book, we have an autographed copy waiting for you. All you got to do is follow the link in the show notes and buy it. Patreon support is always appreciated. Get on that list to be getting our 10 weekly vertical crossovers going up, 10 weekly vertical crossovers going down, plus options made simple, the Charting Wealth Way, and of course our monthly question and answer session where we help you chart the ETFs and stocks you are interested in, as well as answer your questions for practice trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.